I'm saying that I'd like to see, I mean, either we pass it or we don't. I mean, you know, we can continue to talk these numbers forever. I'm just from the old school. When the auditors provide me something, I usually have learned in my 30 years of being in business that the auditors, you know, have a good handle and a good control on the numbers. And again, you know, these numbers are scheduled. They're outside the audit. But I'd ask the auditor, I'd ask Jim, could you provide some guidance? Because you know why I asked for that? Because we keep hearing Dan's numbers and my numbers and these numbers. And I just said, independently from me or Dan or anyone, Jim, how did the jail do? And when we first sat down with Jim, he shared some numbers. And then I looked at him and I had 2 or 3 or 4 conversations with Jim. I said, look, there's some numbers in here that don't belong. Remember the first iteration? There was probation and there was children's services. So we pulled all that out because that wouldn't be fair to the jail. And then there was some one-time revenue in there from the sale of the hospital and the nursing home. And it wasn't fair to keep that in there. So, you know, that was pushed out. And then there was some assumptions that Jim made on benefits. And he said, you know, I'd rather have better numbers than just assumptions. So he worked with Phyllis, and Phyllis provided him more real-time numbers, and he came back and he said, these are the real-time benefit numbers. So whatever we want to say, I think the auditors attempted, fairly and reasonably, to meet a request as the Finance Committee Chairman that I asked them to do. So my point is that we can spend all day talking about what we're doing in 2014, but we've seen, to a degree, I believe, how we've done in 12 and 13. The bigger problem is this, Dan. The jail is only a microcosm of a bigger problem that we have as a county board. And the county board is going to hear tonight that we had a $900,000 operating loss. Okay, now a lot of that will be masked, and I don't want to steal the auditor's thunder. It's going to be masked by the fact that we sold the nursing home, and a lot of the dollars came in, but the truth is, when Jim backed all those things away and shared with Jeff and I a couple of weeks ago, I became extremely alarmed that we have a $900,000 operating loss, okay? Now, we can factor in depreciation and we can do all these cutesy little games, but the bottom line is that if we don't, as a county board, get control of our budget, we are going to go broke. And I'm not trying to be scary here. This is way beyond the jail. This is way beyond the jail budget policy. This is philosophically, if we continue to lose $900,000 a year, what's the next thing? We only have one asset left, and that's the farm to sell. And maybe with the farmland that's recently gone so high, maybe we should do that to give us some cash reserves. But we've got a bigger fundamental problem, and that is the operating problem we had in 12 and 13. You know, in 2012, we lost $460,000. In 13, that just about doubled. And you know what, Dan? You and I are responsible for that. 12, I had nothing to do with. But 13, I was in office. And I am responsible for that operating loss. I take full blame as the finance chairman that we have that operating loss. The Budget Committee worked very hard this year to try to bring a loss into a balanced budget. And one of those reasons and ways was to budget 71 outside prisoners. Okay? That's how it happened, Gary. We were trying to, and you know why we did that, Dan? Because everybody sitting at that table didn't want to hurt a person and say, we may have to cut your job. That's what we did. And I took that very, very seriously.
That's all of us did.
Absolutely. Absolutely. We did. We all did. But we made an assumption that in order to help us have a balanced budget, we made other assumptions. One assumption we didn't make We didn't assume we would have a refinance. So if we do eventually refinance, and I hope we do, that will be an improvement to the budget. Remember, we did not assume that we would refinance. We just thought it was too questionable. So Dan, that's how we got here. But I have this bigger concern with our operating as a county. I'm very, very concerned about it. And again, I'm not trying to be doomsdayer here. I'm not trying to be the Grim Reaper. I just, when I heard those numbers from Jim, and Jim, are those accurate numbers?
Those two that you gave are, yes.
And those are certified by you?
Certified.
Yeah, the loss numbers from the audit, yes.
I'm very concerned by that, and so should every other county.
Those were not
So,
certified numbers.
let's get back to the policy, because I'm going to have to break away here, because I have a daughter that's getting awarded. So either we vote it up or down.
So how are you gonna vote? You vote in the finance committee? Just vote for this? We just got it listed on our agenda as discussion. We don't have the vote listed. We're not voting.
Okay, well, that's fine, but I'd like it to be voted on at our special meeting next week.
Well, we had a committee set up, and was this the approved budget draft of the committee, or is this just yours?
This is mine. Dan at some point felt that we just really didn't need.
Well, we need to get a consensus.
Mr. Chairman,
Is that not
I have an email here that says, I will let Jeff McWhorter know that we have not been able to hammer out a policy for the jail refinance, and I was hoping that we could make this happen. But you and I are just too far apart philosophically on this issue. I do appreciate the time you gave working with me on this. Now, I'm looking at this jail policy. Number one, it doesn't cover anything. It covers every expense for the jail. That's not right. Should the direct revenue for the jail fall below the direct expense for housing the outside prisoners? Okay, that is stated there. Now, we know that a federal prisoner brings in $65 a day. We know that his meals cost $4 or $5 a day for the whole day. That's a $60 profit. Now, we have to take the total number of prisoners in that jail. It's going to take a full-time accountant to figure out what the direct revenue of this jail is, based on the outside prisoners. Because you have to take the total number of the prisoners, divided by the utility bill, divided by the jailers, divided by this, that. By the time you're done, you're going to be so micromanaging one certain aspect of this county is going to be focused on this, which they've been focused on for a year now. We go over this budget every year. You said so yourself, Ted. I see no point in having a policy at this point. I mean,
And that's why I sent you that email, because you basically made it clear that you were shutting down in the discussions, Dan, and that's why I said what
No,
I
I
said.
did not say I was shutting down the
You didn't
discussions.
respond.
What I am doing here, well, that's because you responded in your email that you would not work with me on.
No,
There is nothing in here. What happens when that jail's paid off? What are you gonna do with the revenue? Is that all gonna go to the Public Loan Commission? I mean, if you're gonna have a policy, let's put that in there. Is it going to go reimburse taxpayers, cut your tax bill?
Jeff, I have to leave, unfortunately.
But by the time that comes
That's
around,
fine,
Dan,
Ted.
there's be a different board making
If
that.
we
God,
could, if we
That's
could
not
have,
on us.
we could
That's not on you or I.
have this policy to vote on, next, we have our special meeting next.
Well, it won't be then. You and Dan need to get together and get something put together.
That's fine.
Then they know the answer.
So far,
That's
it
fine.
looks good, yeah. But I think it might need some numbers.
I can't vote for the refinance without this jail policy in place, so
Ted,
I have to go.
I'm sorry, I just wanted, congratulations on your daughter.
Thank you.
But I just wanted to mention that it's because of the Open Meetings Act, because the publication of the meeting for next week has gone out, and that policy is not in it, you'd have to do another special meeting to vote on your policy.
And they could do that.
Next week. I just wanted to let you know that it's not.
24
for
hours
anyone here to
emergency meeting.
decide, you can't decide on that.
We can address this policy in the future. It doesn't have to die.
Thank you for allowing me to move the agenda around.
When is the meeting next?
Tuesday.
Congratulations. I will.
What is the award?
So, yeah, you can.
Congratulations, Ted.
Thank you, Dan, I'm sorry I have to run, I really, I'm sorry.
What is the award?
Change the design.
Thank you.
No,
Yeah, we'll say
she's saying you can't vote on it. Yes, you
I'm just
can.
saying that
Yes, you can.
because of the Open Meetings Act, because the notice has already gone out, and it's been
All
published.
she's got to do is change the
but the publication's been in the paper, and I don't think we have enough
Publicized.
time.
I
I
see.
mean,
To get
you
it
could.
publicized.
If there was another weekend, you
Because
could.
we also have a weekly.
Yeah,
24-hour emergency meeting.
so you could do
That's all
it.
you need.
I mean,
It could be put on the website.
Okay, well, let's move on. Jim, I'm gonna give you the floor and walk us through this,
Okay.
audit.
All right, thank you.
That's
Try to go through, there's a lot of material here. Got some graphs and charts to try to summarize some of this. First of all, I want to talk about, we will look at the numbers, but as part of our audit, there's a lot of letters provided, the financial statements belong to the county. We're auditing the financial statements, they belong to the county. The letters are really coming from us as a result of our audit procedure, so I want to go through those. Somewhat briefly, but hit some of the key points on those. And there are several letters, and the first one is in the actual bound report that we just handed out, and I think there was a electronic copy sent out last week for everyone. So, and like the lead time, if there are any questions, we can deal with those. But on page 1 is our independent auditor's report. I just want to point this out to you that as a result of the audit procedures, on page 2, and close to the top there, it is the opinion paragraph. And we are able to and are providing an unmodified report on the primary government of Mercer County. Now, if you recall, in the past, we've had 3 different component units that have not been combined in the audit in the past. 2 of those were gone as of the end of the fiscal year, November 2015, being the nursing home and the hospital. The third one is the Public Billing Commission. And none of those have ever been combined into the audit. They are disclosed in the footnotes. So we are giving our unmodified opinion on the primary government without the component units. I would just throw in or inject that with the 2 of the big ones gone, that really the Public Billing Commission should be incorporated. It is separately audited. As long as that audit is available when this audit is completed, it should in the future be included in this, and then there won't be that slight caveat in there about the primary government. So it is an unmodified report. It does refer then after that to other supplemental information that is included in comparison to budgets. All of that is included in the audit report. And we are under, with the county, we are under, we call it single audit. It's a result of the federal funding. And we provide a separate report on that, just so that it can be combined. We provide it separately, depending on what the users of the audit report would be, and they may not need the actual audit report on the single audit, which is a high level of compliance auditing involved in that, and that's a separate report. There are some letters in here I'd like to go through also with you. I think everybody should have that, but the
You're on the preliminary draft for the single audit,
for the
right?
single audit, yes.
Okay.
Yeah.
I want to
yes.
make sure I have the
Right, correct. Just to point out, it does list all the federal awards on the first several pages, and the total federal awards of the county on page 4, just shy of $1.5 million, up from last year. It was about $1.2 million last year. But this gives you all the different departments that are involved in providing funds to the county. We do a selection of which grants need to be audited each year based on a schedule that we go through. And as a result of that testing, we provide our letters starting on page 6. So I just want to go to 2 letters, page 6 and 8. And we do have some findings as a result of that part of the audit, which is, like I said, mainly compliance and internal control related. On page 6, this is our letter regarding the controls and compliance for the county as a whole. And there we do define the types of weaknesses that we've uncovered. Material weaknesses would be the more severe ones. Those are discussed in that next to last paragraph on page 6, of which we have 3. We'll go over those in the accompanying schedule. Then we define what significant deficiency, which is just a step below the material weaknesses. We have 4 of those, the bottom of page 6, and those are discussed in the schedule in the back. I will comment though, and you'll see that in another report farther back here, that there were 2 extra comments last year that were removed this year, so a lot of these are repeat, but there's some comments in here about how those have already been addressed. They just weren't addressed by the end of the fiscal year, November 30th. They have been addressed, and some of those taken care of going forward into this current fiscal year. Page 7 just talks about the compliance. That was internal control issues. On page 7, that first paragraph, next to the last sentence says, you know, we don't provide an opinion, but we are able to tell you that there were no instances of non-compliance as a result of our tests. These are control issues that we're talking about, not compliance issues. So as a result of those control deficiencies, we did not necessarily find any non-compliance as a result of that. That's for the county as a whole. The letter on page 8 is our independent audit report on the major programs that were selected for testing as part of the single audit. So this is more specific. And at the bottom of page 8, we actually give an opinion on the compliance with those federal requirements, which there are each grant and each source of revenue from the federal government have attached to them specific compliance requirements. So we test those as part of testing those federal grants. And this states that we are able to give an opinion that the county did comply with those requirements on each of the major programs. On page 9, then, it goes into the internal control over compliance, again, just on these specific grants. And we're not expressing an opinion, but we are giving, if there are any specific control issues regarding those grants. The next to last sentence in that middle paragraph, it starts with our consideration of internal control. It says, you know, we did not identify any deficiencies in internal control over compliance we consider to be material weaknesses. So, as it was broken down to the individual major grants, we did not have the specific issues that we're talking about on the overall county issues. And then the last paragraph there, section, talks about the expenditures of federal awards themselves, the list that we just went over of all the federal awards. We do give an opinion on that last sentence that, in our opinion, the schedule of federal awards is fairly stated. In other words, it does include all of the grants that the county received, in our opinion, during the audit period. So, just wanted to try to go through that. If there's any questions, we can address, but try to explain that. And then, let's just talk about, starting on page 11. And I really, you know, I'll try to hit some of the more significant areas. The first few here are considered material weaknesses, but the first one is on financial statement preparation. I think we've talked about this each year. When we get into talking about the financial statement, you'll see what a comprehensive document that is. We are required to talk about this if our auditee is not able to prepare that document. And I can certainly tell you that we have very few governments that can prepare their own documents. So you pretty much would have to have either a very experienced accountant or almost a CPA on staff to be able to prepare that document and have all the disclosures. So that's really what we're saying there. There aren't any specific issues or findings, but just that overall document is prepared by us, we are also the county's auditors. Same goes in the very next comment with the scheduled expenditures of federal awards. That's one I think we can accomplish. We've been working on that for a couple of years, and it really just involves going, you know, an internal person at the county, going around and keeping track throughout the year of all the grants that are awarded to the county and being able to prepare that schedule. There are numbers involved there on, you know, tracking, but most of that should be part of the grant documents. So we think we can accomplish that. That does state on page 12 in the middle there, the response and corrective action, that it will be implemented during this current fiscal year. So that is the goal on that. The rest of these comments, most of them have to do with segregation of duties. And they have to do with some specific areas that we have had issues, the county's had issues with the last few years. We continue to make these comments, starting with the segregation of duty in the treasurer's office. We give specific recommendations there. the corrective action there on page 13 is that, again, there's concurrence and that will be implemented during this current fiscal year. The next one is also segregation of duties issue on the 911 fund. And it does give some specific recommendations. And there's a little more lengthy response on that because some of that has been done on page 14 towards the top. And we continue, the last sentence is that, we'll continue to strengthen the controls, full implementation by the end of this current fiscal year. So it does give a little explanation of some of the things that have been done. The next one is a segregation of duties issue also in the payroll cycle. Just wanting to strengthen that, the controls over that. Page 15, and right in the middle, does give a corrective action plan. And actually beginning here just recently, there are some steps put in place that should take care of that comment. The journal entry review is the same comment that we did make last year. We think that it is maybe less important than some of the others, but is an important function, and the response to corrective action there is, I think that's fairly easy to implement. That will be implemented during the current fiscal year also. Page 17 does just give you a list of all of those and the status of them, and I just want to point out, as I mentioned earlier, 2 of those show corrected that were commented on last year. They were more specific areas of segregation of duties, and so there have been corrective steps made on that. And then page 18 just kind of gives you the anticipated completion of the ones we just went over, and a breakdown between material and significant. So, this is certainly an important document when it comes to the federal funding, which, as you see, is a pretty significant number, $1.5 million. And I think overall we're encouraged as auditors by the approach to trying to clear these comments and put steps in place to mitigate the control risk there. So again, that's a separate document. Depending on who's using the financial statement, they may ask for a copy of the single audit, including those comments. We have 2 other outside letters or documents here. One is a memorandum. You've got one here that has May 6, 2014 up on the top left. This is our board communication letter. And there are key points here that we are required to communicate to the governing body. Just going through this, we do talk about the responsibility division. As I mentioned earlier, the financial statements, the control environment is the responsibility of the county and the governing body. Our responsibility as auditors is to give you our feedback and give you our opinions and our findings as we test those. The significant accounting policies really wasn't anything significant this year. There are some things coming down the road that Jeff and I talked about in our meeting. We can talk a little bit about that towards the end, but there are some things that are affecting governments that have been proposed, and some of them in place, but implementation is a year or 2 away. Accounting estimates, there's a lot of numbers in this audit report, and there are, obviously some of these numbers are subjected to a level of estimation. We're required to tell you here which ones those are and what the methods are used to come up with those estimates. But I can kind of give you the overall numbers of some of these. The unpaid medical claims, obviously there's some incurred but not reported type expenses that are being estimated by a third-party administrator. That total was about $35,000 of estimation. The depreciation expense, as Ted was talking about, that is part of that loss number that we'll talk about here too. That's an estimate of putting those costs against the years going forward, the cost of the fixed assets. That's $392,000. That's a non-cash expense of the county this past year. Net pension obligation, the obligation itself, not just the current year expense, but the obligation itself is $278,000. And the other post-employment benefit, which is health insurance for retirees, is about $90,000 of obligation. Those 2 areas are areas that are subject to some new government accounting standards that we talked about going forward, where the amount of that liability is gonna change, and that's again something that we can talk a little more about. The other areas on this letter, just audit adjustments. Really, most of our audit adjustments come as a result of converting from the cash basis general ledgers that are kept by the county to the accrual basis numbers that we are providing in the audit report. So we did not have significant adjustments to the cash basis reports. And then we just are required to tell you whether we had any significant disagreements with management, which we did not. Any consultations with outside auditors that were done by the county to gain second opinions on any of our consultations, which we did not have. We give you a copy of the representation letter that management will be giving back to us, and just no other significant difficulties. I think we were able to do more of a real pure audit this year, which helped with the timing of things, and no other issues developing as far as the different departments this year. So it was more of what I guess a real financial audit without forensic issues. The memorandum that's provided here are items that did not raise to the level of getting in the letters we just talked about, but are just matters for further consideration. Obviously, if they're not raising that level, we don't consider those as serious, but they're just a few items that would help. They would help in the audit process as far as some of the timing issues and how things are recorded, so we get them all in the same year, and then those aren't have to be adjusted on the accrual adjustments. Being careful on the transfers, that we get both sides of the transfer in the same year. Vendor overpayments, it's good that those are caught, but put procedures in place to obviously not allow those in the first place. And netting of grant revenue and grant expenses is just easier to be able to prepare this schedule of federal awards if we have all of the grant revenue recorded directly in an account and any expense against that grant in a separate account, so they're not being netted. So that's what those comments are about. Okay, we're pretty much ready to get to some numbers. Behind our audit report in the financial statement itself is what we call management discussion and analysis. I just refer to that because that is, if you didn't want to try to wade through the whole report and all the numbers in those pages 4 to 13, you can get a pretty good synopsis of the results of the year with narrative explaining some of those numbers. I think that's a worthwhile read. On the numbers themselves, I did hand out some graphs and charts to give you kind of an overview, I guess, of where we're going to see some of the numbers when we go through the audit report. The balance sheet on the numbers there, blue being 2013, red being 2012, just comparing the 2 years. Cash and investment level is up. You'll see that in the audit report. Big reason for that, obviously, is the $2.2 million that came in from the sale of the assets, which the assets were not reflected, because again, those public units were not incorporated in the county financial statement. So that's a real gain to the county, just because none of those assets were recorded in the past. Receivables and just grant, that's mainly the difference there is just mainly grant receivables and things like that that were collected more in 13 than in 12. Property and equipment, so that's down, the property and equipment, and you'd want that down. That's why your cash is up, you want those amounts received. Property and equipment is up a little bit, just continuing investments in fixed assets, outweighing the amount of depreciation we're taking. So, you took $392,000 depreciation, obviously you had an increase then in fixed assets of more than that $392,000 to show a net increase. Liabilities, I think this is one of the positive points of the financial statement this year, is a reduction in the liabilities. Again, cash was provided by those sales. As a result of that, some liabilities were paid off. Some revenue anticipation notes were paid off. Accounts payable were brought more up to date. So you can see that graph there showing the pay down of liabilities. The next graph shows tax revenue. And we do have, you know, the kind of, back in the salary report, you see several years